So, I mean, time will only tell how all the ratios settle in the end, which ones actually hold value longer. I'm just happy being part of the entire network and part of the effect. So yeah, I want some T shares now that I can afford gas and stake, paying me more yield. I want my buy and burn pumpamentals from my Pulsex, and I want to earn my Pulse, my gas fees for my layer one to be able to go around and do all my stuff. And I'm getting pretty set up for that. So I do see a lot of potential for the price rally of Hex, and the liquidity pools are smaller. So it is likely that that ratio could expand, go like 400 to 1, just keep going insane in that direction where, yeah, it would have been better if you held Hex rather than swapping to chase Pulse. But that could turn back around in months and all of a sudden fling the other way. The smaller liquidity pools do make more volatility, more chance for price trading. But overall, like if you're staking, it doesn't really matter what that ratio is. You're after the yield for long term holding it and not worrying about price anyway. And if you are worried about price and volatility and trading, I think it's an optimal environment. Like I think that the liquidity pools are nice and small. So as Pulse goes up, we'll see lots of volatility between the Pulse and Hex ratio. And I think it'll be plenty exciting for a lot of traders to want to come in, get wrecked, and leave a bunch of value for the rest of the stakers.
Well, I totally 100% agree with your strategy. It's the best thing to do to use dollars and put it into Hex, Pulsechain, and Pulsex right now. Hex and Pulsex is disgustingly cheap, so these are the assets to pick up. But for somebody who's maybe looking into ratio trading, how about Chef or how about Hexen or anybody in this chat here? Does anybody have an opinion? Because Top Gun, you just said it might go up to 400 in the ratio, right? And I totally agree. I personally see 300, and I have heard other people saying 200, which it touched already once. Would you guys buy it if it goes down to 100 again? This is the big question, because somehow I have a feeling, I have this investment thesis that the hexagons will support the hex ratio at 100. If it goes down more, of course, as crypto, it can always happen and go to 80. Can it go to 60? I believe no. And the reason being is at 100, it was already very easy for a dolphin to scoop up multiple dolphins' positions with Pulsechain. And that's what I said should not be possible. Hex was too cheap in this ratio. Today it's 40% higher. Would it go down if it would you buy it if it goes down to 100 again? This is the question to Chef and to Hexon.
Well, I actually really like Top Gun's response first was like, you said you're still in your accumulation phase, so you would definitely want to buy it at that price, but maybe not by giving up a position somewhere else.
Yeah, that's actually really important. So for me, there are two different kinds of ratio. There's the ratio that you hold of your portfolio. I like to have one Pulsechain, two Pulsex, and three Hex, right? Just to see what is my portfolio. And then also the second ratio that you have to have in mind is like, okay, the Hex Pulsechain ratio. It was 100, today is 140, 40% more. Would you buy it when it goes down to 100? Because this is my investment thesis. I'm saying hexagons are buying Hex with Pulsechain when it goes below 100. And Chef, how about you? Are you agreeing?
Well, why would it be at that ratio? Like,
Because
did Pulse Chain gain popularity and Pulse Chain pumped, or did something happen with Hex?
Yeah, because here's the thing where I'm thinking, like, I look at the price of Hex where it's 1 cent and some change, and I'm looking at the price of Pulse just below that 1/100th of a penny or whatever ratio, and it's like, okay, well, the next time they come to 1 to 100, it's very possible that we're looking at something a lot closer to Hex at $1 and Pulse Chain at 1 cent. And I mean, at that case, like at that point, I think a lot of us would be taking profits. Hex itself, like it's hard for me to think of those ratios because yeah, I look at the prices and I'm never trading between assets because not financial advice, but I'm worried about the tax implications. I mean, everything's on blockchain, everything's visible, and some people have really gotten wrecked because they make a bad trade, they lose money, and then they don't even have the money to pay the taxes they owed when they had the good trades. So everything we do on the chain has impact, and it's easy to just dollar cost average into something because the tax implication of it is nothing. I bought in, so I wasn't trading. There was no capital gain. There was no triggered. I don't like to swap between the tokens very much. Like now, granted, sometimes like just getting in and holding some stable coins on chain is the hard thing for me to do and save, so that I have something that doesn't necessarily have a tax implication because it hasn't changed in value. So I'm not really triggering a capital gain. It's a zero capital gain, so it doesn't matter. So I can go ahead and trade that stable coin if I see a price I like in ratio to the stable coin. So yeah, I can't really comment on what a ratio between Pulse to Hex would cause me to want to swap my Pulse for Hex, because ratio trading is the fastest way to get wrecked. To swing trade in and out of things for me is just not my basis. My whole basis is dollar cost average, and I buy into the things that I like, and there have to be pretty insane ratios. So if I, for any reason, saw somebody say somehow trigger a ratio where it got to 1 to 1 or even 10 to 1, okay, well, that looks like quite a kick in the pants. And that's one of those times where maybe if I don't have anything available, I suppose on that extreme ratio, I would have a lot of hope that it's about to bounce back, and I might do a play for my risk amount, which is $50. Basically, the most amount I would ever take to a casino. $50 is the most I would ever go and do on that kind of thing. And okay, maybe at that point, if it be up to 1 to 1 tokens, I'd throw $50 worth of Pulse at Hex tokens, because my way of accumulating, I now, by those league charts, which I absolutely love, can say I am a Pulse turtle. I am a Pulsex turtle, but I am not a Hex turtle. I'm a Hex crab. So I clearly have a missing goal if I just want to be the turtliest turtle on Pulse Chain. I have a little bit more Hex to accumulate. And so, I mean, when there isn't as easy a thing as to do valuations or speculate like Wall Street, having these weird whimsical goals do help, which is why Wrap Bitcoin might actually get some serious value on Pulse because of whimsical goals. And yeah, trying to get up to the turtle hex leagues is a goal of mine, to get out of the crab stage. I was a shy shrimp when I started, so I'm making progress.
Yeah, and goals are an important thing to consider. If you're kind of like looking at a hypothetical entry point, like what would be a good move to do, you got to analyze your goals. Like, are you going to move from maybe some of your pulse into hex at that ratio, at that ratio, and stay there for 6 months, hoping to catch a 40% climb, or are you going to stake that hex for 5 years? Like, what's the end game or the outcome that you're looking for?
Well, that's a very good question that I did not think about, even because I have so much hex staked already, right? And that's what was my first point, my own personal ratio of my portfolio. And if you keep that in mind, you have already stakes. Maybe you want to play the second level where Top Gun is right. Every trade is a tax implication. This is really an individual issue, but maybe you want to go on this second level of crypto and make more with your crypto that you have. And therefore, I think the hex pull chain ratio is not that problematic, because look, if you use your pull chain to buy hex, amazing. You have like an amazing asset that you can stake, but you should not. You just leave it there. If it goes down, even better, right? You buy more. If it goes up, well, what can you ask for? Now you can buy more pull chain, the cryptocurrency that the next 100 million people want to buy anyways. And that's why I feel so comfortable in these two assets, because first, I can value them, and second, I want to accumulate more of them anyways. But like Top Gun was saying, obviously there is a tax implication, and this is individually for everybody. I was just curious if hexagons would buy hex with pulse chain when it goes below 100, because that's my fundamental basis of my investment strategy right now.
I think it's very possible some people might be thinking like you. I'm just not one of them. Everyone does have a range of investment theses or ways they've come to look at the market, and I've had to have a very practical viewpoint, as I'm a poor pleb and I don't hide it, or at least I feel less like a poor pleb now. Like, I have various aquatic titles in various ecosystems around Pulse Chain. So I'm like, ooh, I'm a shark somewhere. I'm a squid somewhere else. I'm like, all right, I'm feeling involved here. And if we get a good cycle like I think we will, I won't be allowed to call myself a poor pleb anymore, because I will have done all the smart things that I could with crypto. But yeah, my philosophy has had to be very slow, very measured. I wanted to basically get a well-rounded exposure to this ecosystem because I really do see this chain thriving. So yeah, I can't speak personally on the ratio part, but I'm sure a lot of people are looking at the ratios because it is all ratios. But essentially, in the end, my goal, I don't feel so well enamored in any asset that I feel I have the ability to spend it. I feel like I'm seriously lacking in every single asset that I own. So yeah, dollars are the only thing I'm willing to ratio trade for crypto. It has to take one heck of an insane ratio to get me to move. Like watching Luna crash. Okay, as we started to lose zero after zero, I'm like, we're getting closer to a bottom. I got to start spending $10 every time we lose a zero. That worked out for me making some serious money. All right, that was awesome. But yeah, I think I've had all of two swing trades since I got to crypto a year and a half ago that got me off my butt to cause a tax implication to trade one crypto for another because the ratio was so tantalizing. And basically, I can't think of a naturally occurring ratio in the cycle that would catch my attention like that. So it would have to be a pretty extraneous event. And yeah, I guess play that one as I see it.